So my view is that we're still paying for the effects of COVID that cause all sorts of problems. Like nobody could manufacture anything, nobody could ship anything, planes couldn't go anywhere. And so as COVID started to ease, people came back out of their houses, back into the office, back to consuming things, and there were no goods to be bought because all the shelves were empty because nothing got manufactured. So that caused this huge rise in inflation. Really, really tough 9 months in financial markets and for people's savings and investments and potentially for their jobs too.
So why has the price of crypto crashed specifically? And maybe provide some context on how cryptocurrencies historically have moved given the types of inflation or the rate of inflation we're seeing now, given how the stock market is moving now, given the broader context, why we're seeing this crash in crypto.
So crypto is a function of two things: technological adoption and the macro, the liquidity that the central banks are providing. Those two things are the key drivers. So if you zoom out of a log chart of crypto that everybody always tells you to do, you can basically see things like Bitcoin go up, just up over time, and up a lot. But it's very volatile. You get these kind of big ups and downs. So the question is what drives the big up, and then what drives the ups and downs? The big up is driven by the adoption of technology. There's now 300 million people using cryptocurrencies or investing in cryptocurrencies. It's growing at about 100% a year or so. It's the fastest adoption of any technology the world has ever seen. So these are the big pension funds and hedge funds and others. They're also struggling from lack of liquidity because their portfolios are going down from what the Federal Reserve are doing, so they have less money to put into crypto. So I spend a lot of time speaking to these big institutions, and they're all ready to get involved, but they just don't have the cash right now, much like we don't have the cash because everybody's feeling the pinch. So if everybody's feeling the pinch, it's not going to drive up the price. But once this situation eases, it'll start driving up the price. Now, there's another piece of magic that happens with crypto, is crypto doesn't do well in inflation because of the reasons I said. But when the central banks start printing more dollars or euros or pounds or yen or whatever it is, that's called debasement of the currency, quantitative easing. And that is when crypto does really well. So one of the reasons I've been very closely following the prices in crypto recently is because as we start getting a worse and worse economy, we know eventually rate rises will give way to rate. There's two reasons. One, I think it resonates with people that it is a different answer to the financial mess that we live in. This hugely indebted economies driven by central banks and government policies, and people want a different way out. So it resonates as a narrative to people. But what's super powerful about crypto versus almost anything else is the fact of how it works with behavioral economics, because token systems are incentive systems by nature. So to explain it to you at a simpler level, Facebook is a viral set of products, whether it's Instagram, Facebook, WhatsApp. But we as users get to use those things, but we don't get any rewards except connecting with our friends or whatever. And the shareholders got rich as the network grew. So 3.5 billion people use Facebook technology right now. But with crypto, it's like we'd all been given Facebook shares. So imagine if every time you logged into Facebook or used Facebook, you got shares. So you've got at one level with Bitcoin, which is like an asset that the central banks and the governments can't mess around with. Okay, so therefore over time it should maintain its value. Now it's very volatile still because it's still early in its adoption. But it was the advent of Ethereum and the smart contract that was the big game changer. Because almost everything we do, including me coming on this podcast, is a contract. And they're mainly unique contracts. Everything, whether you buy a ticket for something, whether you go somewhere, almost all human activity is some form of contract. Now those can go on blockchain and be recorded. So before, if you buy a car, you have to go to the center and register it and do all of this stuff. It's a pain in the ass. But what happens is on blockchain, it can be authenticated by a distributed network of people, which means it's more secure in terms of who confirms that that contract exists and therefore it can be policed. So that opened up to things like decentralized finance. But that opens up even more. And this is the rise of Web3 suddenly. You can see in the background. That's a sign of basically Web3 community, what I stand for in the space, social identifiers. That all comes here. Also, the other thing that's coming is ID. So identity online is a nightmare right now. We've seen all of the rise of the bots. We've got the rise of AI to deal with, deep fakes. Society is not ready to deal with the scale and speed at which AI is coming at us. And deep fakes, both in visual form or audible form, or the creation of content by AI, such as GPT-3 written content, or OpenAI's DALL-E. All of this stuff is terrifying. We don't know who's a human and who's a robot, who's trying to use us and who isn't. So what we can do is put our identity on the blockchain, and we can even hide the details, but have a proof of the identity. And that allows us to operate in a digital world as we move in towards the metaverse. So right now, you could have a deep fake video image designed by AI that says, a politician says, Florida's been destroyed by this hurricane that's going through as we speak today, and everybody's going to die. Now, if you put that on Twitter, you would see Joe Biden saying this in his voice, and you could not distinguish it from the original. So what happens if politicians use it? We get Joe Biden to say, we're going to send a nuclear warhead to Russia. What does that mean?
But how will you, I guess what I'm trying to understand is, just functionally speaking, how would we be able to identify via blockchain tech who actually is Joe Biden, who actually is Noor Ali?
So everything gets authenticated and proven by, so if a Joe Biden makes a speech and it's videoed by XYZ, let's say the White House, it would then get put on blockchain to say this is an authenticated original version, and you can trace it on chain to say, yes, it got authenticated by the White House and then agreed by the distributed ledger. So every time I look at that video, I can get the token to say this is authenticated and real. But if